Joining us now is Kevin Simpson of Capital Wealth Planning. How are you? It's good to see you.
Hey, Scott, how are you?
Good, thank you. So you trimmed some Microsoft. I said to Bryn at the top of our show, like trying to get inside the mind of an investor who's watching this all unfold, new highs for Meta, new highs for Microsoft, new highs for NVIDIA, et cetera, et cetera. At what point do you decide I need to take some profits like you did with Microsoft?
Well, I mean, I think anytime you're seeing a move like this, and these stocks, heck, Scott, they're going to the moon. You've got to right-size the position. So we come at everything with a rules-based approach, looking at things from a risk management perspective. We like to keep a maximum of a 5% weighting in any one name. So you've got Microsoft up 36, 37% year to date. It gives us an opportunity to sell into that strength, put some dry powder on the sidelines. We still love the company. We still have a 5% allocation, but the multiples do get a little bit stretched. And heck, everything having to do with AI is pushing these things higher and higher. So we've also seen vol increase into the space, and we've been able to write calls on Microsoft last week. Did pretty well with that trade. And even a few minutes ago, we wrote calls for June on Microsoft again, looking to capitalize on that volatility. So we still like the name, but we're taking profits into the strength.
You think it's a bubble? All this stuff that's going on in the market around AI and all these stocks. You've seen a lot of markets, right? Does this feel that way to you?
Well, I think it's starting to, and that's the problem, because you've got legitimate companies that are making money, and you can invest in them and you can own them, and we own Apple and we own Microsoft, and we're going to continue to hold on to them. NVIDIA is not in our space, it's not in our universe, but boy, what a run that's had. But if you think back to 1999, the dot-com bubble, if you think back more recently to 2020, sitting around in May, all of the stocks that were going to be COVID stocks, all of the work-at-home companies, no one wanted to miss them. Meme stocks, it gets to be the same thing. So what I'm concerned about is that a bubble could happen if we start to see companies that are non-profitable just taking advantage of investors looking to get caught up in the hype.
Well, let me ask you this. So what you just said of NVIDIA, quote, not in our universe. Why not? I mean, is it just too rich? And isn't that the whole point in some respects of writing the covered calls that you do? Again, I just bring it back to Bryn. She employs the same kind of strategy in many ways that you do. She can own NVIDIA. She writes covered calls against it. Why not you?
Yeah, Bryn has a great strategy as well. Ours has to be a dividend-focused company, and the dividend on NVIDIA is just so inconsequential, and the dividend growth isn't there. Every stock that we invest in has to pay a dividend and has to have a very strong dividend growth. So I'm hoping that at some point these stocks become part of our universe and they can be candidates, because specifically to your point, Scott, they're unbelievable companies to write covered calls on. And if I was a shareholder in NVIDIA, I would trim the position, I'd take some profits, I'd be writing covered calls, and I would be using the protective put strategy to lock in some of these profits that we've enjoyed. Again, I'm a Microsoft Apple guy, but NVIDIA can be done the same way. You can look at the trade the same exact way as professional portfolio managers. Yep. We don't get the luxury of hyping any one thing. I can't just run into AI because it sounds cool. We've done the same thing for 20 years, but I think it's easy to get caught up in it, and I would caution people just to be careful.